Well, there are a number of things which are driving inflation in the US. This morning, the issue came up about housing and that housing sales were faster than expected. You go to the grocery store, you see prices have gone up for milk, meats, other products. Or if you go to grocery stores like in White Plains, New York, you find empty shelves for where products used to be on a regular basis. And there are, I would say, three major factors that are driving the change and pushing inflation prices up. One is decarbonization. I think, I'm fully supportive of the ideas that we need to change and change radically how we use energy and what the outcomes are for energy use. However, you've had this huge push on the part of a lot of governments around the world to go green. And that's commendable, but the issue there is that if you are in the if you're in the carbon-based industry, if you're in fossil fuels, there's not a lot of incentive for you to plan out further, and there's been a reduction in the supply of oil, and this is causing one of the shortages. The second aspect is protectionism. We started trade measures, if you want, all the way back to Obama, but it accelerated under President Trump. And President Biden, in many aspects, is just as protectionist as President Trump was. And he's largely kept the tariff regime in place, which tariffs do raise prices. And the last aspect, and this is more of a structural change and will take longer, is the redomestication of supply chains in the United States. I think we've gone through a long period where the consumer has been king, and you're seeing that dynamic shift. And it's shifting for political reasons, it's shifting for social reasons. Well, I think there are a number of things that came up with low inflation. The US went through a period in the 1970s where inflation was an issue. And for those old enough to remember, we had the OPEC oil price hike, and it was oil every other day. You could get gasoline every other day. And being a young person at the time going out on a date, I ran out of gas, which is always a cliche, but it actually happened to me. So you go back to that type of mentality. I think one thing the Fed has worked very hard to provide an idea of where inflation should be, and they've used policies to keep it around that 2%. The second thing, which I think is important, has been technology. While the economies, US and other economies have grown, technology has improved productivity and it has kept prices in check. And I'd say the other aspect was globalization, which relates back to the earlier question of redomestication of supply chains. But globalization allowed you to take your business out of a higher wage environment or a higher environmental cost environment and put it in another country where those concerns were not as high and the prices were much lower, and you gain that competitive advantage. But I think those days are over. Well, I think the current rate of inflation, I think it's controllable, it's containable at this stage. We'll probably end up with inflation around 4% this year. Next year, I think it will stay higher than what we expect. There are calls by some people that there's going to be hyperinflation, or we're going to have inflation for longer than what we would like. I think you're going to see inflation for a couple of years, maybe a little bit longer. But the implications for the economy and for the United States are that as we go through the redomestication process of supply chains, that's an inflationary movement. That means that you're A, going to pay workers more, and B, you're going to look for new technological innovations. And what that does is it also provides dynamic under which various states are going to find themselves competing for that re-domestication of the supply chain. Texas supplies, semiconductors. Ford or GM might be very happy to buy them from Texas, but then you're looking at, as this process continues, does all that re-domestication go into states which are more competitive, less tax-driven? And it raises questions for states like New York, probably Illinois, other states, California, where the tax levels are high. And we watched with Tesla that pulling out of California and going to Texas because of high taxes and all the environmental concerns. So there is a real, I would say, a socioeconomic and political dynamic that goes with inflation, but it also can be fit more in the context of structural adjustment in the economy. Well, I think most of the tools are out on the table. I mean, I think the Fed is going to start within the next 6 months to taper, which means that they will reduce the Fed's ability to buy securities in the US markets, mainly bonds. The second thing is interest rates, okay? Interest rates are the real sort of big button to push if you're in the stock market. The bond market has one view, the equity markets, we're pumping it up, we're going for new records every day. Bond market tends to be more conservative. I think the answer to your question ultimately is the Fed will start to raise rates. I mean, the way these parties usually end is when the Federal Reserve takes away the punch bowl. This time, it hasn't been a bowl, it's been more like a punch trough, and it's been huge, and the Fed has been highly accommodative. If you begin to taper, you begin to shrink the trough more to a bowl, and then finally you raise interest rates. The expectation from a lot of people on Wall Street is that will probably start late in 2022. I think that process could start a little earlier if inflation continues to push where it's been going. The other big thing which tends to be forgotten is that if we see President Biden's budget go through and the infrastructure bill go through, that's probably going to add at least $3 trillion more of spending that's going to be pumped into the US economy. If you spend that much money, it is going to push for more jobs. We've had an issue on the wage front where a lot of people have not come back to work. We'll see how the labor market pans out in terms of, does this squeeze wages up higher, and does it draw people that have not been working back into the labor force? And if so, that could be inflationary as well. So I think raising interest rates may come sooner than later. That's my humble opinion.